Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with July 16th, 2009 stock market report for you to use tomorrow or today, depending on where you live and what time zone you're at. Like I said, it's a worldwide country, so that's what we pay attention to. Anyway, first off, things I want to get off my chest is that I've had a very bad week this week with bad things happening, and the good news about that is that it seems like every time that we have some kind of bad week for me, we end up having a bullish market. And as you can see at 719, when the NYSE was barely trying to hold on to the 200-day moving average, look at what it does. It takes off Monday and Wednesday. So in 4 days, here you go, a 7.38% gain in the New York Stock Exchange. And in the NASDAQ, what you can see here is in the, as you can see, look at this. 1, 2, 3, 4 days, 7.35%. That's perfect, you know. And look, in a week, 7.56%. So things have been going really well since I've been having some minor issues. Now, I want to go ahead and be honest with everybody. I'm always honest. I know some of you say, Joshua, you're not very professional, or Joshua, you are professional. I just want to remind you guys that the professional guys left most of you broke or lost a lot of you guys a lot of money. So I assume taking it the methodology that I take it is the correct way. Cursing is not good. I should not curse. And as a 30-year-old who grew up in a very bad environment, because you got to remember, you guys don't know who you are. I assume some of you think that since I'm involved in the stock market, I come from the Hamptons or whatever. But I was born and raised in St. Louis, Missouri.com, and you can do a check on that on anywhere on the web, on any kind of website that tells you where people were born, and you can see that I'm from St. Louis, Missouri. If you've never visited St. Louis, Missouri back in the 1980s through 1990s, you should know that it was not a good place to be at the time. However, here I am and I came through. So first off, let's go ahead and talk about the indexes that we follow here in America, since we're still used to following them. We have the New York Stock Exchange, and we have the NASDAQ and S&P 500. First off, with the New York Stock Exchange, I just want to remind you, by last Friday, look at where it was, sitting right at the 200-day moving average, and it looked like almost we were going to have problems. It looked like after failing on low volume, remind you, which was the clue to scare the crap out of people, including me eventually on 622. So this day and then this day led up to me going bonkers, or at least there it is, 622. That was the day that just left me nuts. However, I paid closer attention, and once again, this is why using technical analysis only and not reading the news will come and work into your favor over the long run. As you can see here and here on the 615 and the 616 date, where the stocks fall, I don't know, see what they can fall combined, where they fall 4.26% together. Look at the volume on each day. Well, it picks up on each day, giving it 2 days of technical distribution. But look at where it's at, which is more important to me relative to the 50-day volume average. Just the 50-day volume average, the yellow line. Well below it. Well below it means the selling wasn't that severe. And then the biggest tell for me is the huge 3.52% loss in the NYSE on much lower volume than the Friday. And like I said, they were going to probably use Friday as a very tricky day, and use it as the Russell rebalance. I guess that's when it was. My mind has been a little crazy recently. I've had some personal at-home issues I don't think I want to talk about because they're a little too personal. But that day really threw me off because I figured, well, the higher volume, I know why it was, just because of the Russell rebalancing. So would you really have a sell-off like this if it was, you know, that important? So I wasn't sure what to think, unless right here was the Russell rebalancing, which I just will not know until I just make 626. 629. So yeah, it's pretty possible. So I could be wrong. Who cares? The most important thing, what matters, is that this day, when it fell 3.52%, it was on lower volume. So that's the NYSE. And I still have it going back to the ugly session, as you can see before this week. Now look at the NASDAQ. The NASDAQ during all this time looked fine until 622. And on 622, when it joined the New York Stock Exchange with having a 3.35% decline on lower volume, but still having such a big decline, I really did act wrong, and I sold too many stocks. Now, I want you guys to remember, some of you guys came back to me and were like, Joshua, you sold everything, you know, you got me out of all my stocks, and now I'm screwed. Well, right down here, I can clearly see that on 6/23, the day after the huge bad day, I still had 42 longs. 46 longs, excuse me, with 4 shorts, 50 total. So I had 46 longs and 4 shorts. So how did I sell everything? What did happen was, I believe going into the day, let me see what that date was again, 6/22. I don't happen to have it written down on a hand here, how many I had, longs to shorts. But the day before, here I have it. Longs, 87. I had 87 longs with 4 shorts. The day after this nasty sell-off on 6/22, I went from 87 longs, sadly, to 46 longs. Now, does that mean that I sold almost half? Yes, it does, and I do apologize. However, what did I hold on to? The stocks that were either up the best, in the best uptrend, in a nice clean line that didn't have a downtrend, and or canceling stocks. So it shouldn't have knocked you out of any great stocks whenever this day did happen. And so after the 22nd day looking pretty bad, being very upset that we spent all this time up here in June, kind of on bullish volume, as you can see all the accumulation days, it was very upsetting to see a 3.35% breakdown. However, what happened is that we started to come back immediately. And on 6/26, I do believe that was the Russell rebalancing, because I have a lot of longs listed right here. So with me having all of these longs listed right here, this proves that that was the Russell rebalancing. I'm sorry for you guys already knowing. I guess I'm an idiot. Sorry. I apologize. So there was the Russell rebalance, and it looked good after the day. But I did warn Platinum and maybe some Gold members that, listen, and even you guys watching the video, i.e. Gold members, that could be tricky, and beneath the Russell rebalancing, they could be buying the small stocks that they want to run while they sell the bad stocks off. Well, the very next day we were up, then we were kind of sideways, then we had a nasty negative 2.67 sell-off, which, let me go back to that day, 7-2. Guess how many sells that I had that day? Full sells. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That seems like a lot, but it really wasn't for a day like that. If volume would not been around average, and if it would have been above average, I could have had over 20 sells. So I just want to keep that in mind. I want to see where I'm at in my video. Good, 8 minutes. So just to let you know that even after that sell day, things were looking ugly, but I still had plenty of longs. It was 7-2. How many longs do I have? I don't happen to have it written down for you, but let me look at the next day. Yeah, and I don't happen to have it written down after longs. And then the next day, the market sells off a little bit, and then it has another huge sell-off, higher volume this time, and this time it came with distribution day, and even though volume was below the 50-day volume average, I still had a problem with it. However, you know what happened on 7-7? New shorts. 2. Only 2. And that's not normal. On a day like day where it would break down below the 50-day volume average on hard volume, I should have about 10, 8, 9 shorts that I can take. For you guys, you know, you got to remember, if I could run money, I'd run money. And right now, if somebody wants to give me a high-paying job running money, I'll do it. but running other people's money would have been insane because to explain myself on 622, then from this date to then what happened, oh my God. Now I want to notice something else that was very huge to happen on me. On 7-7, not only did I have only 2 shorts, I had only 1, 2, 3, 4 full sells. How can I only have 4 full sells and 2 new buys on such a nasty breakdown day on the New York Stock Exchange? And let me go look at the New York Stock Exchange NASDAQ. See, look at the New York Stock Exchange. It was almost all ready to go below the 200-day moving average. I mean, that's horrible. That just shows you it was right back to the 622 sell-off, so it looked like it was bad. But look at the volume again. The volume is itty-bitty. Barely any volume whatsoever behind the selling. And that kind of helped after whenever this day didn't follow through immediately and we rallied a little bit. It made me realize that something must be different. And by looking at the NASDAQ, even though the volume was a little bit higher, I still was, like,